What's up, everyone? Let me know if you guys could see me and hear me. Give it a few minutes. Once people hop on, I will start up. Awesome. So in this video, I'm going to go over market analysis, how I always do on my weekly analysis videos. We'll get into some key areas to look out for going forward, what's been going on in the market, some key events, and then eventually we'll get into a Q&A session, and we'll rock with that for now. But if you guys have any suggestions, I'm all ears. All right. So if you see me looking this way, I have the chat over there. All right. And I appreciate all the support as well. So the reason I'm doing this is I just hit 5K subscribers on YouTube, so it's like a nice celebratory live stream. All right, so let's get into it. So today was the first day in a while that the S&P and the Nasdaq closed below the 50-day moving average. Okay, so if I go to SPY and QQQ with the 50-day moving average, you could see the SPY has not had a close below the 50-day moving average since April 30th. Okay, and if you go to the QQQ, you could see very similar. It has not closed below the 50-day moving average since, again, April 30th. So this was from Charlie Bolello leading into today. He said the S&P 500 has closed above its 50-day moving average for 198 consecutive days, which is the fifth longest streak since 1950. So again, you know, us bulls have had a nice run, right? In terms of every major dip has been bought in the S&P and the Nasdaq basically since the April lows. So it's interesting to see where this brings us next because one can argue that because we closed below the 50-day moving average today in both major indices, that some technical damage has been done. Okay, so with that said, where does that lead us? So a big thing to keep an eye on is Bitcoin, right? Bitcoin has been a major contributor to the weakness, and if you guys look at Bitcoin and the S&P and the Nasdaq, right, side by side, you'll notice that both will really move in tandem, right? So if we go to Bitcoin, you could see that the recent price action has been very weak, right? Let me remove these lines. And it not only did it test 100K, but it broke below 100K for the first time since May. Excuse me. Okay? So part of the reason as to why the S&P and the Nasdaq have been selling off and seeing weakness is because of the fact that Bitcoin continues to the downside and remains very weak. Okay, so I've been telling the members in the Discord to keep an eye on Bitcoin because if and when it finally manages to stabilize and hold a bottom and start to make higher highs, higher lows, that will ultimately stabilize the Nasdaq as well and ultimately allow for bulls to have a much easier ability to buy the dip in the equity space and push value higher. Okay, so what's very interesting to note is the fact that the relative strength index has hit oversold on the daily time frame in Bitcoin, and you can see it has not happened since back in late February. Right, this was the last time the daily chart of the Bitcoin hit into that oversold area on the RSI. And you can see each time it has done that, right down here as well, each time it has done that, it has gotten very, very close to a bottom, right? Does it act as, the absolute low where it just goes straight up from there? No, but sooner than later, after hitting the daily oversold level on Bitcoin, it has either gone sideways or up. So it has stabilized in plain English. Okay. Another thing that's very, very important to note is the fact that today there was a deadly cross on the 50 and 200-day moving averages. Okay. So in, plain textbook definition of a deadly cross is when the 50-day moving average crosses below the 200-day moving average. And, based on the name, deadly cross, you can, it basically implies that it is a bearish piece of context in terms of technical analysis for any instrument that you see that happening on. However, I do want to point out that the last time we saw a deadly cross on Bitcoin, it literally marked the low. So the last time this occurred was back in April. And if I go ahead and mark a vertical line, the last time it had this deadly cross, it was literally the low, and from that point on, it moved to all-time highs, right? It from that deadly low, right? We'll go ahead and I'll delete this. From that deadly cross, right? From that day that it made the low, all the way from the lows to, the all-time highs, it literally rallied 70%, and that was the absolute low, okay? So is that going to happen again? It could, right? So basically what I'm saying is you got to have an open mind, right? The folks who are very, very close-minded and think that just because we have a deadly cross on Bitcoin, that it's inevitable that it's going to continue to the downside, right? That is not the case. And again, the last time we had a deadly cross, it literally marked the low. So, you got to have an open mind and really understand that you need price action to confirm your thesis in plain English. Okay. So, the reason I say Bitcoin, right? The reason that crypto has been so important recently is, proven fact. Anytime there's a downside move in Bitcoin, right, and the NASDAQ, right, they move hand in hand, there has been a 0.7 ratio in terms of their level of correlation, right? What does that mean? 1-to-1 correlation would be perfect moving in tandem, where the S&P and Bitcoin would move perfectly in tandem, totally one-by-one replica of one another, okay? 0.7-to-1 is about 70% of that 1-to-1, right? Which is very, very high, okay? So again, anytime there's weakness in both asset classes, right? Crypto and equities, where both S&P and the NASDAQ and both crypto and the NASDAQ and S&P are going down with, panic and fearful, right, where there's mass liquidations happening, they move very, very closely to one another, okay? So that's very, very important. Another thing is the fact that there's extreme fear in crypto, okay? So you can see if I go in and say fear and greed, right, in terms of crypto, you could see, that's the other one. So fear and greed in terms of crypto, all right, you could see, I believe it's single digits, if I'm not mistaken, right? Let's see. No, so it's 17. So on a scale of 0 to 100, it's at 17. Basically, anytime it gets below, what is that? Below 25, I believe, it shows extreme fear. So what does that imply? That implies that a lot of people are betting that that crypto is going to continue to the downside, right? And something that I talk about often on this channel is when there's lopsided positioning, usually what ends up happening is the opposite, where the path of least resistance is, what no one thinks is going to happen. So when you have so many people fearful, so many people, short the market in terms of, shorting crypto and shorting Bitcoin, usually it doesn't take much to flip that sentiment and to cause a short squeeze. Okay. So that brings us to another point, right? On October 10th, right? Unless you're living under a rock, you probably heard, read some headlines and some tweets or news that day marked the biggest liquidation in terms of margin calls on in crypto history, right? Even more than when FTX blew up, and even more in previous major collapses in the crypto space. Reason being is a lot of people were using levered products in Bitcoin and ETH and all the other crypto coins, right? Basically, they were using it's called the perp market, right? And those assets are sometimes 10x levered, right? So it's way more they're way more fragile in terms of getting margin called. Okay, so since that date, there's been a lot of fear in crypto, right? Because if that date marked heavy mass liquidations, people lost millions and millions and millions of dollars on that date. Since then, that has been the moment as to when the Nasdaq and Bitcoin have been moving in close tandem, very, 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 very correlated in plain English. Okay, so the reason I bring this up is very important. The reason as to why Nasdaq and Bitcoin have been moving in close correlation to one another is because of the mass liquidations we're seeing. And I want to show you a tweet from today, right? This is posted today at 3:56 p.m. Crypto liquidations continue, right? So it's been going on for 5 weeks now. Another $1 billion worth of levered crypto positions have now been liquidated in 24 hours. This brings total liquidations to $4.5 billion over the last 7 days. Interestingly, liquidation spiked by 300 million over the last 4 hours alone, right? It almost seems like a large player was liquidated today, leading to the Bitcoin drop into 91,000, right? Wild times for crypto. So Dylan, how does this mean anything to if we're looking at the S&P and the Nasdaq? When you have liquidations in anything, whether it's commodities in crypto, in S&P, Nasdaq, right? Anytime you have liquidations where folks are getting margin called, right? What they need to do is they need to raise capital in order to cover those margin calls. Okay, so what are they doing? They're selling other risk assets like the S&P, the Nasdaq, your Nvidias, your Apples, right? Even gold today, when Bitcoin broke when Bitcoin broke yesterday's lows, gold even started to sell off, right? Let's look at that 15-minute chart, right? You go here. This was Sunday's lows, and at 12:30 p.m. Eastern time, gold started to break down, right? 12:30 p.m. You could see that's or what was that? Let me see. Maybe I'm wrong. So it was a little bit after the fact. But basically, when Bitcoin broke those lows and continues the downside, gold even started to really, really sell off. And you could see massive volume spike after the gold close, right? Gold closes at 1:29 p.m. Eastern time is when the gold close is. So usually following 1:29 p.m. Eastern time, usually the volume starts to kind of decline. But you could see there was a mass sell program that occurred, right? And you could argue, oh, well, it was under, it was beneath the low of day from Friday, but I would argue that it happened even before that Friday low was broken. So bottom line is this. When you have margin calls, right, day in, day out, basically every single day, right, the lower Bitcoin goes, the more liquidations you have, the more margin calls are being, are being had. People have to then sell other instruments to raise capital, right? Let's just say someone just got margin called in Bitcoin and they've been holding Nvidia for the last 3 years, right? They have to now sell something that they have some good premium in to raise that capital to cover their margin call. So bottom line, what I'm trying to say is if and when Bitcoin starts to stabilize and starts to print higher lows, higher highs on a daily time frame, I'm not talking 15-minute, I'm not talking an hour time frame, I'm talking day by day. Once it starts to really put in a bottom, that will ultimately allow the S&P and the NASDAQ to also stabilize, period. Okay? And again, if you look at their price actions side by side, you'll notice that they have been moving in very, very, very close correlation recently. Okay? So up until the point that Bitcoin manages to stabilize, we should continue to see weakness in the S&P and the NASDAQ. Okay? So definitely keep an eye on Bitcoin and the crypto space as a whole, because that's going to give massive edge if you are an S&P and NASDAQ trader. Okay, so again, massive damage was done so far. That doesn't mean that it's game over. That doesn't mean we throw the towel and just start, blindly buying puts. Okay, we want to see that price action confirms that methodology. Okay, so in theory, S&P has not broken below the previous lows. Okay, the previous lows were on November 7th. Okay, we go to the NASDAQ. Okay, it did breach November 7th lows on Friday, but even today we have not broken below this previous Friday's lows. Okay, you could see, from call it 24,700-ish, right, down to 24,625-ish. That marked in between the November 7th lows and November 14th lows. Okay, so as long as S&P and the NASDAQ stay above those two respective levels, technically the bulls are hanging on by a thread, but they still can try to save the market from heading much lower. On the flip side, if and when S&P and the NASDAQ both breach those respective levels, and the VIX is able to really sustain value and go much higher than it did today, that would likely lead to further downside pressure, especially if Bitcoin were to continue lower as well. That would only exaggerate the downside pressure. Okay, so if we look at the 50-day moving average on the QQQ and the on SPY, right? Again, it was the first day in 198 consecutive days, right? Fifth longest streak since 1950 that both indices closed below the 50-day moving average. Friday, it got below, right? It gapped down below, but the bulls managed to close it above, so that didn't count. But today, both SPY and QQQ closed below that. Now, going forward, those lines are going to be very, very important, right? So because those lines have such influence, right? They've proven that they have held very, very, very well in the past, right? Basically, we definitely want to keep an eye on any line, any technical area that has proven to work very, very well. Because if it was previous support for, call it, multiple times over the last 200 days, right? Now we have to assume that it's going to turn into resistance. Okay, very, very simply put. So retest back into that 50-day moving average, we have to assume that it's going to act as resistance and sellers are going to be there defending price. Okay? Now, if that is not the case, if the S&P and the NASDAQ manage to recapture that 50-day moving average, that would be a net positive for the bulls, because what would likely be the case is that SPY and QQQ, right, because they close below there, that basically implies that there's aggressive sellers factored into the market, right? There might be new sellers factored into the market where position might be a little bit more lopsided, where if we can recapture back above and close above, right, a daily close above that 50-day moving average on both indices, that could trap some late shorts and, it basically create a short squeeze effect. Okay, but again, we have to assume that both 50-day moving average, right, are going to act as resistance going forward. Okay, obviously, keep an open mind, but that is the case. So um, you can see NASDAQ also had this level, right? I've talked about it on the last YouTube video that I did right here, right? QQQ had, or NASDAQ had this level, which I have since deleted because it's clearly not holding, right? It has not been respecting it well. But basically, on Friday, I expected that trend line to act as resistance, right? Why did I think that? I thought that because every single test since late May acted as very, very strong support. Okay? So again, when you have a technical area, whether it's a line, a zone, any type of technical thing that acts as support resistance multiple times, especially not only multiple times, but over a long period of time, right? It builds its influence. It has much more integrity, right? So you have to assume that it's going to fail there on the retest. Does it happen 100% of the time? No, but does it happen more times than not? Yes. So on Friday, when we came back into that level, right, back into that line, I actually bought puts, right? And clearly they did not work. But when it came into this line, right, and then rolled back over, I bought lotto puts expiring that day on Friday, expecting, like I said, expecting that line to now act as resistance. It's been holding support perfectly since May, right? Multiple tests, multiple major lows at that line, right? So on the first retest back into that, I expected it to act as resistance, and clearly it didn't. So those puts, I sized for 0, so I was totally okay with losing the amount that I put in. But without a doubt, that was a clear sign of bullish action. And what ended up happening is it went much higher following that in terms of the intraday basis. So now, right, we're clearly, you could see in the morning it held there a few different times and then finally cracked below. So going forward, again, I don't use this anymore because it hasn't been working too well, right? It's already gone below, above, below, and if it goes back above, it's when a line or level stops working well and stops rejecting price or being a pivotal line for price, right? I just get rid of it because the more time you keep those lines on your chart, the more cluttered your charts become. So I don't want that to happen. So I will continue going forward, instead of that trend line, to look at the 50-day moving average. Okay, so the 50-day moving average going forward will be very, very important because, again, it's acted as clear support on every single test, and we have to assume that it's going to act as resistance. Okay, so that is that. So basically, right now I'm neutral. Right, the reason I'm neutral is we're still above monthly lows on the S&P and the NASDAQ, right? So the NASDAQ is still above the November 7th low, as well as the S&P, okay? However, because we're below the 50-day moving average on SPY and QQQ, that's very contradicting. So on one hand, yeah, we're above support, but on the other hand, we're below a major line that's been acting as a line in the sand for, ever since April. Okay, so I'm basically in a weird contradicting neutral territory. So above 50-day moving average, I would lean a little bit more bullish, and then below those monthly lows, I would lean a little bit bearish. Where then I don't necessarily think that it's going to go straight down from there. But if both monthly lows breach, I would imagine that going forward, the sentiment will flip from buying the dip to selling the rip, okay? Where then you would focus on finding and honing in on areas of resistance, as those areas of resistance will have a higher likelihood of rejecting price, okay? So, most important event of the week by far is Nvidia earnings, Okay, Nvidia earnings are Wednesday after the close. Okay, and here's the picture. I showed this picture last YouTube video, but you could see the S&P 500 is more tightly correlated with Nvidia than it is with the other, say, 499 names that make up the index. So basically, uh, as goes Nvidia, so goes America. So it's crazy, right? The weighting that Nvidia has in terms of, you know, the S&P and the Nasdaq. I believe it's 8% of the Nasdaq as a whole, which is a crazy, staggering number. Basically, whatever happens in during those earnings will literally have massive influence on the overall market in very, very simple terms. Okay, so unless you're the CEO's neighbor, right, and you talk to him while you get your mail every morning, right, we don't know what's going to happen on that date, in plain English. Okay, so if I had a magic 8 ball, I would ask it, but basically what I'm saying is price will be the telltale sign, right? If you see price breaking to new highs, new weekly highs, and sustaining value, you want to go with that trend and go with that momentum. Okay, I'm not saying to blindly chase that high. I'm saying that if Nvidia supports the market and has very favorable earnings and has a favorable outcome and it goes up, you then want to focus in on leading tech names, right? Leading AI or semiconductor names, and look for areas of support on those respective names, because if Nvidia is strong, chances are those other tech names are also going to follow suit. Okay, so my main goal, if I see that move in Nvidia to the upside, is to focus on relatively strong names that are coming into areas of resistance or areas of support, where I want to definitely focus in on those names to see if they can influence the market to go higher from there on out. On the flip side, if Nvidia has disappointing earnings and we come off and go much lower, same concept applies, where then you would want to figure out which AI or tech names are relatively weak, relatively weak relative to the other ones, and you would want to kind of point out areas of potential resistance to kind of keep an eye on, because those are going to be those are going to give the best alpha in terms of figuring out areas to put money behind. Okay, so Nvidia earnings in very, very bottom line is the most influential market moving event that we are going to have this week. Okay, we also have on Thursday, we have the NFP report from September, and you guys could argue, oh well, September was 2 months ago, how does that even matter? Okay, it matters because we haven't had any big pieces of data because of the US government shutdown, right? And that's part of the reason as to why the market is going lower too. Yeah, Bitcoin weakness, crypto weakness is one of the reasons, but we also have the fact that there's been some negative AI news, right? The whole say like Oracle aspect, right? There, who was it? Barclays downgraded their debt, right? Basically, OpenAI had Sam Altman had some interviews that questioned OpenAI's ability to, manage to pay back the debt, right? The IOUs that it has with partnerships with other companies, right? So there's been a few different things, but one of the things has been the lack of data, right? And the reason I say that is because if we go to the CME Fed tool, right, you could see the next Fed event is December 10th. And the chances are now 42.9%. So a couple weeks ago, I forget what week in particular, but I showed you guys this and I said, hey, if the December meeting goes below 50%, that's going to weigh on the market. Okay, and here we are below 50%, and it is weighing on the market. Basically, what's been going on is because we've been lacking data, right? Because of the government shutdown, right? We haven't been getting the jobs reports. We haven't been getting the CPI, PPI, PCE. A bunch of data has not been coming out, And what that's doing is it's putting Powell in a very, very difficult position to figure out whether or not the economy is capable of lowering rates, right? Is data hawkish, dovish, right? He has a very, very difficult time in terms of knowing if the right choice is to cut rates or to keep rates the same if he doesn't have data to work with. So you could see, right, if we go back a month ago, there was a 93.7% chance that the Fed was going to cut rates on the December 10th meeting. Then it went down to 62.4 a week ago, which was still, pretty good odds, right? I would say about 51% is pretty good odds, right? Then on Friday it was 44.4%, and now it's 42.9%. So it's literally been bleeding lower and lower and lower. So expectations are now unlikely that Powell is going to cut rates. And again, that is bearish for the market, because part of the reason that the S&P and the NASDAQ were making all-time highs last month were because of the pipeline in terms of the Fed cutting rates in December and then further in 2026, right? Lowering rates is ultimately good for the market because for multiple reasons. Right? We'll keep it at that, but I've talked about that at great length before. Okay, so this is no bueno. But if this thing can kind of tick back up, and it could be helped by the NFP report on Thursday, right? Because again, just because it's from 2 months ago, because it's delayed from September, it could still be a net positive, being that it could give Fed Chair Powell a decent idea, or a little bit better of an idea of the state of the economy and the state of the jobs market. So if this thing, and all you type in is CME Fed Watch Tool, and it's the first link. If this thing can get back above 50%, I think it would be a net positive and act as a tailwind for the overall market. Okay, but if this thing continues to sink lower, then it would act as a headwind, in my opinion. Okay, so that's that. So another thing that we've been seeing recently is a little bit of a money rotation. So leading into last week, I would say there was a massive money rotation out of tech stocks and into other indices, such as like the Dow Jones and the Russell, mainly the Dow Jones, where you had clear relative strength in like healthcare names, energy names. So essentially, there was a big divergence where S&P and the NASDAQ made lower highs, right, from late October to mid-November, right? You could see the NASDAQ was also making a lower high, whereas NASDAQ was making a higher high, right? So without a doubt, at one point in time, the Dow Jones was relatively stronger than the S&P and the NASDAQ, and it was showing relative strength across all the components in, where there was a money rotation out of tech names and into the names that make up the Dow Jones, right? So what ended up happening was the Dow Jones came into a key area of resistance that a member in the Discord actually pointed out, and I posted it in the Discord the day it was happening. So we had this trend line stemming all the way back from January of 2022. You latch it onto November of 2024 highs, and you can see it literally failed there almost perfectly. It came up there right on November 12th, and I mean, you really can't get much more perfect than that. So essentially what that meant was, and I wrote this in the Discord, I said, if you have a strong asset, right, and this goes across the board, this goes for crypto, commodities, equities, right, this is across the board. When you have a strong asset, right, the relatively stronger name, right, and it's coming into an area of resistance, the strong one should be the one that's able to overcome an area of resistance, right? Because why? It's because it's strong, right? So if you have the relatively strong index, right, the only one that was at all-time highs, right, the S&P and the NASDAQ were clearly making lower highs, whereas the Dow Jones was at all-time highs. When you have the strong index failing at resistance, that is not a good sign, because it implies that it's going to roll over, and that the S&P and the NASDAQ, which are the weaker indices in relation, are going to lead the downside pressure. And in hindsight, that's exactly what has happened. So since that high was made, the Dow Jones is down about 4%, and the S&P and the NASDAQ has led the move to the downside. Okay, so ideally for bulls, the ideal scenario is going to be that that rotation goes back into tech, right? And what could cause that is Nvidia earnings, right? If Nvidia earnings are favorable, that could be the pivotal moment where the money rotates out of non-tech back into tech, and that would be a net positive for the overall market if you are a bull. Okay, so that's part of the reason as to why Nvidia, outside of the massive weighting that it has, that's part of the reason as to why it's so freaking important. Okay, so that's very, very important, as noted. So going forward, again, if the November lows get broken on both the S&P and the NASDAQ, and the VIX is really breaking, say above 2275 in the November contract. It's actually expiring. It expires the 19th, so in 2 days. So I'll look at the next contract. So again, if S&P and the NASDAQ breach below monthly lows, and the VIX is above, call it 2150, right? That would clear the last few highs, right? That would be a net negative for the overall market. The VIX going higher would put additional pressure on the indices, and as a result, that would imply that the S&P and the NASDAQ are going to get sold on pops higher. Okay, so that's definitely very, very important to keep an eye on. Okay, so another thing is the fact that SOX, which is the semiconductor index, I have a saying, where stocks goes, stocks go. So basically this thing is heavily influential, right? It has a massive beta, meaning when this thing is plus or minus a decent amount on the day, it influences the other, the S&P and the NASDAQ as a whole. So this thing also is at a massive trend line as well. Okay, you could see it has not broken it, but it's pretty damn close. And this trend line, right, it stems from April lows. This trend line also lines up with the 50-day moving average, right, almost perfectly. So that would be another net negative if, again, S&P, NASDAQ, Bitcoin all breach lows, and SOX also breaches below that trend line. That would be no bueno in very, very simple terms. Okay, so these are all levels that I am keeping an eye on going forward, and it's not much, right? For someone who looks at 15 different things to all happen at the same time, right? Good luck with that, right? I'm mainly focusing on S&P and the NASDAQ, right, alongside the Bitcoin, because the Bitcoin has really, really, really led recent price action, right? So it's proven to really, really lead moves, right? Bitcoin broke lows today, and that was well in advance where the NASDAQ and the S&P were still flirting around green territory on the day. And once Bitcoin broke lower, that's when the S&P and the NASDAQ, I would say 10 minutes later, is when they broke low. So it gave you a little bit of a heads up. It was a telltale, it was a leading sentiment indicator, so which is very helpful as a trader, right? It's basically telling you what's going to happen in the future, right? So that's very, very important. And then leading up to today, RSP, which is the equal weighted S&P, right? This is a good sense of the overall broader market outside of tech, right? This thing leading into today was holding up very, very well, right? It had this level from back here, right, that's been holding since mid-August, right? It has 1, 2, 3, 4, 5 different tests. It was holding above there, and basically, it was holding above last week's lows, whereas the S&P and the Nasdaq were well below last week's lows, and that today ended its streak. So that's another net negative. Okay, so again, I'm net neutral right now because on one hand we're still above monthly lows, and then on the other hand we're below 50-day moving average. So it's conflicting information, but those I'm just going to give you a very clear sense of where I stand. Okay, so below those monthly lows with the VIX surging, that would make me more bearish. A break back above the 50-day moving average and a daily close above on the QQQ and the SPY will make me lean a little bit more on the bullish side of things. Okay, so that's very important. And I'm not going to go over it again because I went over it last video, but in very, very simple terms, right? We still have extreme fear, right? You could see there's still a ton of extreme fear, right? We're 15, right? Whereas a week ago it was 29, a month ago it was 28, and a year ago it was 51. So extreme fear means that a lot of people are bearish, okay? So a lot of people are pessimistic to the market. A lot of people are leaning short, right? Whether it's via puts, via, shorts in shares, shorts in futures contracts, right? But a lot of people are pessimistic in terms of the market and think that it's inevitable in terms of it going to the downside, right? So again, it doesn't take much to squeeze the market, right, to the upside. And in past history, the market does not top out, or it usually does not top out when we have extreme fear in the market. Okay, so usually the market will put in a major top when there's extreme optimism, extreme greed, extreme complacency, right? So again, that's the fact that it's extreme fear usually coincides with the market going higher. Okay, will that happen this time around? I have no idea, but that's just a blunt fact of previous times that there have been major tops in the market. They do not come at a time where there's major fear. Okay, so that's that. Another level that not to get overwhelmed, but 6725 is a CTA level. This was in the most recent Goldman newsletter that I received. 6725 on SPX, not ES, but SPX, represents a CTI level or CTA level where CTAs start to sell, right? Systematic, right? What is a CTA? A CTA is a algorithmic program that buys and sells relative to the overall trend of a market. So if you have a major uptrend, CTAs will buy on dips, right? They'll just go with the trend of the market, right? It's just systematic. It's pure algo driven, right? On the downside, right? On the flip side, when the market is going down, they'll sell on rallies and sell on breakdowns. So technically 6725 was the start of the CTA liquidation, where I read 20% of CTA holdings are liquidated once that level triggers. So below that level is when 20% of CTA holdings are basically sold. So you could see, or in previous times, there have been times where you get those daily closes below major CTA trigger levels, but the market ends up going to the upside. So I'm not saying that is, it's doom, right? It's doomsday that we're below that, and it's inevitable that the market's going to come much lower. More so, I think that is going to be a key area, because anyone that has the Goldman Sachs newsletter is going to kind of try their best to defend that area on the upside or the downside. So with a lot of eyes on that level, I think it's worth noting. Okay, so that is that. So again, hopefully you guys are with me in terms of the clear areas that I put forth, right? So that is that. So we went over. I'm just looking at my notes. So that is that. All right. Let's see. So I'm going to go over one thing that I wanted to in terms of a specific. I'm going to go into specific equities, right? Individual equities. So Google literally made a new all-time high today and then failed to sustain above there. So you could see Google prior leading up to today, it double topped up near 291 and a half on October 30th, and then again November 11th, November 12th. It gapped up today because the 13F came out, which is basically the major investors. The 13F came out for Berkshire Hathaway, which is Warren Buffett, and they disclosed that they bought a lump sum of Google shares, and that 13F came out Friday. So anytime Warren Buffett takes a big stake in a company, it usually goes up. So that was the news on Google. But again, the fact that it failed there clearly shows some relative weakness in the overall tech space, which has been a driving force of the recent pressure that we've been seeing. Apple has been relatively strong, right? You can see over the last month, it's up 7.8%, whereas Nvidia is up 3.5%. So Apple's more than double in terms of the strength relative to the most influential stock, in the whole market. Today, this thing came down to an area of recent support and it held. Okay, so going forward, it's a decent spot to keep an eye on. But this has been an area of consolidation previously. Then it tried to break out, failed, came back into this level and held. So Apple still has a very large amount of weight as well, right? If we go to Slick Charts, you could see what is Apple. Apple is number 2 in the S&P. Yeah, number 2 in both the S&P and the NASDAQ in terms of market cap weighting, right? It makes up 5% of the S&P, and it makes up 1% of the S&P, 1.85% of the S&P and NASDAQ. So it definitely has a lot of weighting in terms of the influence it has. So if that level gets broken, right, it loses support at that that multi-week low, right, that multi-week support, that could also add additional pressure on the S&P and the NASDAQ as well. Okay, Tesla has been pretty strong. Tesla's kind of weak actually. Today, I don't know if it was over the weekend or today. Elon Musk called out Bill Gates on Twitter and said, "Hey Bill, I hope you covered your short." Right, and a lot of people took that as that big news was going to come out, and it showed some relative strength on today's open, and it had a nice rip on right when the market opened today. Okay, so Meta's been very, very weak. It recently closed the gap, and it was holding there as of last week, but since then it kind of rolled back over. So this has been very, relatively weak relative to the other mag names. So basically, right, what I was saying before is if Nvidia earnings are favorable, you would want to then go to like a heat map, right? And you would want to see which names are showing relative weakness versus relative strength. So I would say, okay, if we look at the last week, right, if Nvidia earnings are positive, right, I would want to keep an eye on this, right, in terms of tech, in terms of, right, tech services or electronic technology, and figure out what companies have been relatively strong, because those are the companies that are going to coincide with Nvidia if, it goes up or down in a large manner. Okay, so I always look at the heat map to kind of get a sense of, what sectors are driving the market up, driving the market down, and then within those sectors, what are the leaders, okay? And those are the ones that I really, really hone in on, because, there's a quote that goes like, look at what's moving the market, not what's getting moved with the market, right? What that means is what is influencing the trend of the market? What is the actual leader that's driving the sentiment in the market, right? Not what's moving just because the market is going in that direction, right? What's actually the leader? What's driving the sentiment? So I'll look at this, very, very often and see what the, major leaders are, okay? And then I wanted to look at MSTR because there's an interesting piece of context on this one. This thing has absolutely been a dud, and I'm really not a fan of MSTR in terms of the model that they have, right, where Michael Saylor basically has convertible notes and sells shares of the market or sells shares of the company to then raise capital to buy more Bitcoin. I think it's very, very counterproductive. But there is technically a setup here that I'm going to be watching, right? And this relies, it's contingent on Bitcoin stabilizing. So the fact, again, that we went over in the beginning, the fact that Bitcoin just had a deadly cross and, counter to what's supposed to happen on a deadly cross, right? The fact that the last deadly cross acted as the absolute low, right? Just putting that back here, right? The fact that the last deadly cross that occurred here, right, literally marked the absolute low of the move back in April, and then it went higher from there, and this is yet again another deadly cross. So if what happened in April happens again today, where the deadly cross triggers a some support in the market, right, when Bitcoin stabilizes, I'm definitely keeping an eye on MSTR for this reason. First off, it's at an area of previous resistance, now technically support, right? We scroll back in time, you can see this was a major high back in 2024, which kind of consolidated for months and months and months and months before the massive move to all-time highs, okay? So now that we're back into that area, that upper extreme where the consolidation and the previous all-time high at one point, right? That's one thing. Another thing is the fact that the MNAV, which MNAV stands for market cap to net asset value multiple, right? It's a tongue twister, but MNAV is important for stocks like MSTR and BMNR, right? Stocks that have other holdings, right? Holdings of other assets that dictate the relative or the strength or weakness of the company itself, right? This is important, right? So the company, so MSTR, as of recently, I don't know if it was today or yesterday or the day before, right? But right now, the MNAV, right, the company's market cap is less than the amount of Bitcoin holdings, okay? So in theory, that's a positive thing for a shareholder, right? Think about it. If it owns more Bitcoin than the actual stock is worth, that's a serious divergence. That's a mispriced instrument in plain English, right? So in theory, what should happen is it should go to the point where those values are at an equilibrium, right? If they own more assets than the company itself is worth, there's some alpha to be had. So basically what I'm saying is, because of that factor, right? I don't like MSTR's model, but because of that, I start to pay attention. So if and when Bitcoin starts to stabilize, this could turn into a long setup where you use that area of previous resistance, now, technically support, as an area of invalidation. So we have a clear area to lean on, right, which is 197.75-ish, right? Clear area to lean on, and a very, very, very good thesis being that it's technically underpriced. So when technicals and fundamentals align, I definitely pay attention and really, really hone in on that setup to really come up with a actionable trade idea. So here we are. But again, it's very, very contingent on Bitcoin stabilizing. So because if Bitcoin goes down, so are the assets. So it's very, very important that we confirm this thesis, this reasoning with a coinciding effect in the actual Bitcoin spot price. Okay, so now I'm going to do a Q&A. So anything you guys want to add or ask, right? Whether it's psychological based, right? Psychology questions, individual tickers you want me to go over, any questions, literally any questions. So I guess I'll go back. Let's see. Let's see. And thanks for everyone coming out. I appreciate it big time. Let's see. Do you have any notable mentions for this year as we're winding down? It's been full of events, government changes, shutdowns, etc. This is my most fun year for sure. Notable mentions, yeah, I would say, there's been a lot of, I would say, for myself, I like to look at pairs, right? A big part of my system and my strategy is looking at different instruments and finding different signs of divergences with an added layer of areas of technical analysis. So I like to look at whether I'm looking at a sector or individual instruments, and I like to look at which ones are showing relative strength, which ones are showing relative weakness, right? And with that information, I pair that with key areas of support, key areas of resistance, so on and so forth, to give me that extra edge. So this year, for me at least, in terms of a notable mention, there's been a lot of clear pieces of context that have proven to move in tandem with one another that I didn't necessarily have in previous years. So recently, right, I should say, leading into say all-time highs in the S&P and the Nasdaq, right, like a month ago, I'd say, from say October 10th lows to the October, mid late October highs, there was a common theme where there was a sector of, say, quantum, nuclear names, right, AI names that were really, really, really strong. And if you had an idea of which ones were stronger than the other ones, right, you had your NBIS, your IRONs, your SanDisk, right, you had a few names that I never even heard of leading up to this year, that were totally leading the market in terms of the whole AI theme was just going parabolic, where every single dip was getting bought. So I would say that's a notable mention in terms of when you have a market narrative, right? When you have a narrative that's driving the market higher or lower, you tend to have a sector that all participates in that move, and there's some really, really solid edge and really honing in on that sector that's driving the move and driving the momentum, and figuring out the names within that sector that are showing the most relative strength. And again, there has been really, really solid setups within those sectors. So that's something. The fact that another notable mention is the fact that there's been a lot of fear in the market, right? Even since April, the positioning since April has been totally lopsided, where tons of people are fearful, tons of people are bearish the market, and you could argue that they have a hatred for Trump. They don't think that he can run the country, right? There's been a total opposition in terms of Democrats and Republicans, right? And what that's doing is it's driving up the what's it called? The money market funds. So the money market funds, right, are literally at their highest levels ever. There's $7.48 trillion in money market funds that are settling for, call it 3.5 to 4% APY on their money per year, right? And because of that fear, right, that's why they're putting their money in money markets, because they're like, oh, why would I go into the market, right, the equity market, if I can just get guaranteed return on investment at 4% in the money market, right? CDs, money market funds, high interest yield, right? Savings accounts, right? So with all of that money sitting on the sidelines, again, they're settling for 4%. Meanwhile, they just missed out on 30% from April lows. So there's a massive opportunity cost of having your money sitting in there. Okay. So what that's setting up for is, when Trump unleashes the QE, right? He has literally vocalized it that he's going to do so, right? Recently on Truth Social, he has said now that the government shutdown is over, right? We could start to really come into where we go from QT to QE, right? QE, right? You have these money flows coming into the market. The more and more the market goes up and the more and more that Powell cuts rates, right, there's going to be a much more of an opportunity cost where folks aren't going to have their money continue to be in there because the rate is not going to be as appealing, right? The Fed funds rate right now is 4.09%. But as Powell continues to cut rates, right, this thing's going to go down to 3, go down to 2.5, where, again, folks are going to have to move their money out of this because it's going to be too much of an opportunity cost to not have exposure in the market. So because there's $7.5 trillion in the money market, right, and Powell is cutting rates, where's that money going? It's going to go to the stock market. So that's in my opinion, that is the most bullish factor on a long-term horizon. It's not going to matter a day from now. It's not going to matter a week from now. It's not going to matter a month from now. But on a longer-term horizon, anyone that you talk to who's saying, oh, there's going to be a massive crash, we're not going to see these levels for the next 10 years, it's this, that, the other thing, show them that chart and ask them, where the heck is that money going? It's going into risk assets. It's going into your Bitcoins. It's going into your gold. It's going into Nvidia. And that's going to prop up the overall market, period. So that is, in my opinion, the most notable mention because of the fear that people have because of Donald Trump's sweeping tariffs, because they hate him, because they don't think he's fit to run the United States, right? That, in my opinion, is a massive, massive mention that is going to end up being very, very powerful long term, in my opinion. Okay. Let's see. How do I get those Goldman newsletters? I get them sent to me because I work at a prop shop, and the owner of my firm gets every newsletter you can imagine: Morgan Stanley, Goldman Sachs, the whole nine. So I get them sent to me personally, but however, there are services out there that you could pay for, where they have like a freaking a whole feed of active real-time newsletters, right, from Goldman to Morgan Stanley, JP Morgan, all the big banks, Nomura, stuff like that. So I don't want to say it because I think it's kind of illegal, because it clearly shows in small print on the articles that they say like these are not supposed to be shared, like blah blah blah. So I don't want to boost that loophole. But if you type in on Google Goldman Sachs newsletters for sale, you could find it. Something along those lines. Could you analyze gold and oil? Yeah, I just went over some, but gold, as of today, it really started to get dragged down by Bitcoin. Right, when Bitcoin broke the lows, the selling pressure in gold really started to exacerbate as well. Gold is still very strong in relation to the other different asset classes. Usually, when you have such a strong asset, right, and you're in the Q4, right, you're in the last quarter of the year, usually that will continue to outperform because there's a word, there's a topic called window dressing. Window dressing um, basically is when fund managers will try to prop up their books and make their holdings, right, make their funds more appealing to new potential investors. So they'll find the assets or the instruments that have been showing relative strength for that year, just so that when they go to pitch their books and pitch their hedge funds to potential clients, they'll say, hey, take a look at our holdings, and those potential investors are going to be like, wow, this guy's holding gold, this guy's holding Nvidia, this guy's holding Google, like these are all at right near all-time highs, this guy's got to be killing it, right? When in reality, though, that hedge fund manager just like moved around positions to make it look appealing. So usually that is a real thing, and that usually tends to act as a supporting factor in strong instruments that have outperformed for that full year leading up to that Q4. So the trend remains up on gold. Ideally, it's got to hold right where it's at, like in this consolidation area right here. Right, there's like it broke above that. Now it's retesting this area of consolidation. Ideally, it's got to hold in this general area. I know it's a very, very wide zone. Let me see where the 50-day is. Yeah, so the 50-day, perfect. Ideally, it's going to hold the 50-day moving average, right? It hasn't been hit since mid to late August, and you can see it acted as very, very nice support. Since the breakout above 3,500, right, which went to all-time highs, that has not been retested. So ideally, if it holds the 50-day moving average, it should continue to be supported throughout, from now to the year end. But if Bitcoin continues to the downside and those mass liquidations happen with the margin calls, then it's a little bit of a threat to gold because this would be a risk asset that has outperformed, where folks will have some profit in gold for the most likely, where they might sell gold to cover their margin calls. But if Bitcoin can stabilize and gold can hit that 50-day moving average and get defended, I would say that it remains very, very bullish going into year end. Crude I haven't really been too active with because it's been very, very sideways. It has this channel that it's been respecting pretty well. People call that like a bull flag, where this is the flagpole and then this is the flag itself. Ideally, it's got to break out of here and sustain value, say above 60, and sustain value to really move to the upside. I know for a fact that CTAs are short of crude oil. I read that last week. So if this thing really starts to build traction to the upside, those CTAs will have to cover their shorts and ultimately get long, and that will add some nice supportive flows into crude oil. So ideally, if it can break above 60 and a half and sustain value, that would, in my eyes, would be a net positive. But I haven't really been active this because it's been very, very choppy, and that style, that price action does not resonate with my style. Let's see. How do you define that Bitcoin is stabilizing a bounce and hold for a certain amount of time? Yeah, I wouldn't say that there's a certain amount of time that's like a fixed time that's like one size fits all, like a universal number. But just very, very generally holding previous lows and printing higher highs, higher lows, and taking out areas of potential resistance. Like this would be one of them. The fact that this area right here was previous support, right? This was Sunday lows, and then it was support earlier today at 11 a.m. Eastern time. It bounced again. So once areas of potential resistance, which in this case is this purple line, start to clear and it starts to really, really sustain value above those areas of of potential resistance, that is an early sign of bulls coming back into the market. So again, ideally it's got to, take out areas of potential resistance and then really, really just, start to really make higher highs, higher lows. I would say at least 2 to 3 separate days it does not breach the previous day low. I think that would be a good start. Out of plain curiosity, did you used to work for a big bank, Goldman or something? You clearly know your stuff, man. What's your background? No, I haven't. I mean, I work for a firm now, but it really comes down to having a passion for the markets. Like, I read all the time. Like, I literally I take the bus into work, into my office. I live in Brooklyn. I work in Manhattan. Um, every bus ride to and from work, um, I have my laptop out and I'm just reading newsletters. I'm reading about different things that are happening in the market, different drivers, different news pieces. Um, I'm really, really passionate about this stuff. It doesn't feel like a job for me to read stuff. So the more you read, the more you look at charts. I've been reading charts for the last, 8 years. Basically every day for the last 8 years, I've been looking at charts, looking for different correlations, oh, well, Bitcoin keeps making lows and it's really putting pressure on the NASDAQ, right? I start to really realize certain things. And over time, when you look at the same exact patterns over and over and over again, day in and day out, week in and week out, you start to really, really pick up on certain things. And then I'll literally look it up. I'll say, like, okay, I've noticed that Bitcoin and NASDAQ have been really, really moving in tandem. So I'll go on, like, and freaking AI these days, I use Perplexity. I'll go on Perplexity and literally type in, um, you know, do Bitcoin and NASDAQ tend to coincide with one another? If so, why? Like, and I'll just read why, in terms of what Perplexity is telling me. I'll read why they do, if they do, some things to look out for. I'm always trying to, think and look at the market in different ways. And again, I look for a lot of, divergences and mainly in the commodity space where, I'll look at different calendar spreads from different months, different how, crude oil affects heating oil, how RBOB gasoline affects, crude oil or heating oil, right? I'm looking at different divergences and really, really using them around areas of key resistance and support. And that's literally a big portion of my edge. So I'm always looking at this stuff. I always, enjoy reading about it and learning about it. So that's how I know just stuff like that. I by no means do I know everything, but I appreciate you saying that. Anyone know which MA use for the U.S. dollar chart? I mean, you could use any moving average. I tend to just look at whichever one is nearing or whatever one is has acted as a clear support resistance in the past. So like I'll like play around with this. So like the 200-day, you can see the 200-day moving average rejected price on November 5th. So because it has acted very, very well in the past, I have to assume that it's going to continue to work well until proven otherwise. So if this thing rallies back into the 200-day moving average, I'll keep an eye on it and see whether or not it can, take that 200-day moving average, or if it fails, so on and so forth. So ideally, I'm looking at this, and if it rejects there, I'm going to now look at other pairs, right? Other currencies like the yen, the euro, the pound, and see if it has a coexisting area of support, right? Because if dollar index is at resistance and the yen is at support, that's a good spot to get long the yen because it's a double confirmation because they move inverse one another. So that's another playbook setup that I have is looking at the inverse of, or looking at an instrument that usually moves inversely and trying to find area of resistance and an area of support on the other one. And that gives me two pieces of context backing up my idea, my thesis. Any thoughts on the 4-year Bitcoin pattern everyone keeps talking about? Yeah, I did see that people are calling for October 6th as the high, right? The cycle high, which clearly acted, perfectly, right? People were calling for that October 6th high years in advance. So I found that very, very interesting. So clearly it does mean something, right? Because it's worked like a freaking charm, right? People were calling out October 6th years in advance. So yeah, I mean, if a time cycle works that way and and it's proven to work that well, I'll definitely keep an eye on it for sure. Do I think that it's impossible for Bitcoin to get back up there? No, but anytime those 4 year cycles occur, it's definitely worth noting. It's definitely worth paying attention to. That's for sure. Is the 200-day moving average considered a good entry for QQQ? Yeah, for sure. Will it work 100% of the time? No. But if and when it gets down there, God, I mean, I would definitely be a buyer down there for myself. That would be another 10% move downside. I would I would be a very confident buy, and you could see it's acted as resistance very, very well, leading up to the breakout in early May, right? So it clearly did act as a very pivotal piece of technical analysis. So going forward, yeah, hell yeah, I would definitely be a confident buyer down there if that were to get hit. With all the methods you've used to find confluence, key levels, RSI, SMAs, etc., do you have something of a ranking for those you lean on and use more? Yeah, I would say so. I have a video in the Discord, in the accelerator program of the Discord, that I go over how to measure the significance of a level, or not even a level, but a technical area in general. So I look at some levels with more conviction and more influence than other levels on my chart, right? Whether it's a level, a line, a zone, whatever the case may be. So there's definitely methods to gauge whether or not a line or a level are strong, right? In plain English, right? In uptrends, areas of support will have a higher likelihood of working, and then in downtrends, areas of resistance have a higher likelihood of working. So that's one thing, right? That's very basic, simple thing. But also the amount of tests in terms of the timeline, right? How long between different tests? How long has time progressed between different tests, right? That's very important to gauge the significance of a line as well. So yes, I look at certain technical areas with more influence than others, for sure. And then the more confluence a specific area on the chart has, where if I have a coinciding area of where a trend line or a fib or a moving average is all aligning in the same area, that obviously enhances the probability of that area working as well. So the more context, the merrier in terms of probabilities. So yes, to answer your question, absolutely. Let's see. What's up, Dylan? It's Quee. Nice to see you. Thanks for logging on. You mentioned how the market is moving from the tech AI names to more stable sectors. How and where can you look at this or look to see this? Yeah. So it's pretty simpler. I mean, it's really just looking at the different sectors and looking at price action. Like if you see that Nasdaq, right, QQQ is down, right, in the last month, it's up 0.95%. Whereas let's look at XLF. XLF in the last month is down 0.87%. So XLF is relatively weaker. There's let me see, it's the spider sector ETFs, right? There's this website that shows each sector, and you could look at which one is relatively strong or relatively weak on a particular week, or a month. So this is helpful as well, right? You could see you can see over the last week, right? Healthcare has been the leading sector, right? So again, then I would go into the healthcare sector, figure out what are the holdings, right? So if I click on this, right, now I can see the holdings. So now I'm looking at the holdings and I'm seeing, okay, what within the healthcare sector, what is relatively strong, what is relatively weak? Because if the healthcare sector is if money is rotating out of tech and into the healthcare sector, right? And I can catch that trend early on. My main focus is now trying to figure out what stock within that sector is showing relative strength, because that's the one that's going to have the highest probability in terms of bouncing at areas of support. So that is what I'll really try to hone in on and try to figure out. So you can go on a month, right? So you could see XLC and XLK are the tech, right? You could see out of tech, right? XLC, XLK, and it has gone into energy and healthcare. So those have been the driving forces of the Dow Jones, right? That's why it was relatively strong leading up to the high it made last week, and there's some alpha to be had. So again, it's just really looking at the price action, but this is a nice little tool that you could use. Just type in SPDR ETF sector tractor or something like that, and click that link. But I don't necessarily use that website unless I'm looking to see what specific names are in each sector. Instead, I just look at price action. I'll just say like, okay, NASDAQ's weak, Russell is strong, right? I could see when the Russell's making higher highs, higher lows, whereas the NASDAQ's making lower lows, lower highs, and I could use that divergence, and that implies that there's a money rotation out of tech and into other, small cap names, say. Is it possible for a retail trader with no college degree to break into a real prop firm in New York City? If so, what are some things you recommend to go down that path? I would say yes. There's different firms have different, things that they are looking for, right? Some firms might require a degree, whereas other firms may not, right? I know from personal experience that I do have a college degree, but I asked my boss after the fact and asked, because a lot of people ask me, hey, do you need a college degree? My boss said it was nice to see that you had one, because it shows a sense of responsibilities and that you could manage different tasks and so on and so forth. But that wasn't the deciding factor. He said the deciding factor was the fact that you're very passionate in the markets. You're able to really bring your edge, in terms of value to the table, in terms of the other guys at the firm, so on and so forth. But I know two different people. One guy is literally at my firm. I'm not going to say the name, but there's two brothers that work for my firm. They used to trade in the pit of the New York Mercantile Exchange. Very good traders. Long story short, they hired this person that reached out to them. It was a younger person. I think the kid was, I don't know, 24 years old. Basically, the kid reached out and said, I'm really passionate at the markets. I'm not consistent in terms of profitability, but I can bring value to the table because I have a vast knowledge in terms of coding. This person went to school for computer science, and he knew how to code different softwares and systems and integrate them into trading. So he reached out to them, right? Despite the fact that he was not profitable, he did not have a proven edge, he did not have a track record in terms of profitability, but he had something to bring to the table. It got him hired, and he's been here for 3 years now. He is literally still works for those two brothers, right? The traders, and not only is he learning their systems and their ways of profitability, they're very good traders, but he's also providing value where he's taking some of the stuff that they look for and turning it into a quantitative, angle per se. So it really comes down to the ability to network and the ability to pitch yourself as an asset. What are you good at? What can you bring to the table that proves that you are better than, say, another applicant. So it doesn't necessarily have to be a college degree or a proven track record. It could be other different things. And as long as you can provide value for whoever you're reaching out to, and we live in a world where there's Instagram and Twitter and LinkedIn, right? There you have access to all of these people that work at trading firms, right? Type in on Google trading firm NYC, you'll see 10 different ones. Then look up each of those on, say, Instagram, LinkedIn, find out who works at those, send them messages, right? There's so many different ways to go about it. QT and QE are quantitative tightening and quantitative easing. Technically, quantitative easing is bullish the market, and QT is technically bearish in some ways or another. It doesn't mean that it goes, the market goes straight down in QT and straight up in QE, but when Trump says it, it means a little bit more than other presidents because he has much better policies in terms of like the banking sector, and he's much more lenient on certain financial abilities per se. What is your experience with edge decay? It's a good question. I really just stick to the setups that I look for. I have 4 different playbook setups that I look for, and rather than scrapping each one and just starting over when I start to see periods of underperformance, I stick with it because I'm betting that over time, as long as I stick to what I know works in the market, I will, the over the larger data set, it will absorb those periods of underperformance, right? So rather than scrapping everything and starting, with a blank, portrait, instead, I'm more likely to do some playbook setups over others based on the market conditions. So if we're in a massive uptrend, I'll trade 2 of my playbook setups. If we're in a massive downtrend, I'll trade another the other one that tends to work very, very well. If we're going sideways, I have another playbook setup that tends to thrive in those conditions. So I do adapt, but it's more so knowing which out of the 4 playbook setups to use based on market conditions, volatile conditions, trending conditions, so on and so forth. So every system, every strategy goes through periods of underperformance. There's no such thing as, a flawless strategy that works every single day, every single month, every single year, right? So I'm always tweaking here and there little things that align with the market conditions. But again, I don't just flat out say, screw this, it doesn't work anymore, I'm never using it again. I don't do that. So, that's my answer to you. Can you do a recap of some of your most recent trades? I gotta save that for the Discord, the Academy. That's part of the main thing that we go over on the weekly webinars. But that's, I gotta save that for them. But the one that I went over 2 with them last week in terms of trades that I was going to take, and a trade in soybean meal was one of them. But again, I gotta keep that kind of exclusive to them. In the previous video, you said gold will perform worse than Bitcoin. Do you still maintain that point? That was contingent on the fact that gold and to the Bitcoin, or no, it was Bitcoin to gold, had to hold that area, right? This area. I said it had to hold this key area, which coincided with the election, and it also coincided with the Liberation Day lows, right? And that's where we were bouncing then. So I said, as long as that massive support that was from the the election when Trump got into the office, and the Liberation Day, which were two major turning points in the overall market, as long as that area held, then Bitcoin would outperform gold. But technically, we've broken below that, which implies that now Bitcoin's going to underperform relative to gold. So I would keep an eye on that shaded area. Draw on your screen, right? Literally BTC divided by GOLD. It shows a clear reference point in terms of the spread difference. If and when Bitcoin is, if and when this pair is above that, that's when Bitcoin will outperform gold. When the pair gets below that, as we are now, that's when Bitcoin will underperform gold. So I was using it based on that specific, very, very pivotal area that has held two other times. Are there any newsletters you'd recommend to stay up to date with markets for the average day trader? Yeah, some good free ones are there's Market Brew is a good one. Let me see, Market Brew, I believe. Yeah, brewmarkets.com. You literally just put your email in there, and they send you every morning, or every evening, every morning. I'm on a few. There's a few within Brew Markets. It's totally free. That you just give them your email, and they send you an email going over what's been going on in the market, some key areas, some news, some things to look out for, stuff like that. So that's a good free one. And then on X, there's a guy, Neil Sethi, Neilsethi, I believe. He also has an emailed newsletter as well. He does it every single day after the close. He has really, really solid insights in terms of what people are saying, different things to look out for in the market, some very, very good pieces of context. So both those are free, and both are really have abundant amount of information, like good information that you could use to really monetize. I appreciate it, Bassam. Thanks for hopping on and supporting. With a firm, are you restricted to what you trade? Maybe with other firms, but with my firm, no. As long as I have a thesis, right? If I have, you know, I have a reasoning, right? If I have multiple pieces of context that back up my thesis, it coincides with what my edge is, what my strategy is, and I'm using, an amount that caters to my risk tolerance. My boss is very, very flexible in terms of allowing me to trade certain items. Like recently, like within the last 6 months, I've taken my first trade in lumber. I've never traded lumber before, but there was a 6 setup in lumber that ended up working very, very well. And I literally texted him one night and I said, "Hey, can I get turned on for lumber? I have a really good setup that I'm looking at trading, and I need to be turned on for it." And he literally texted me, "Yes. What do you want your limit to be?" So I looked up how much the price per tick was, right? How much it was per point, and based on the stop loss that I was using, right, relative to the setup that I was looking at, I told him, "Hey, can you give me X amount of a limit in terms of the amount of lots that I could use?" And he said, "Yes, you should be good tomorrow." Like, there was no questions asked. He didn't say like, "Oh, I'm not, I'm not, I'm not capable," or he just said, "Yeah, go for it." So he's very, very, and that flexibility is earned. He doesn't just give it to anyone that's coming, that's coming off the street. So I've been at the firm for 4.5 years. So over time, I've given more. I've been given more responsibilities and given more access. So no, I am not restricted to trade anything. From my understanding, I mean, yeah, in theory, like I can't trade power, right? There's a power market. I only know like 2 traders ever that trade it personally. It's a different ball game. That's like freaking major leagues times 10. The margin that's necessary to trade power is a different ball game. So stuff like that, no, but 98% of the time, I'm not restricted. How long have you been trading full time? 8 years. What's up, Daniel? Nice to see you on here. Hope all is well. How long did it take you to find a bus to ride every morning to work big enough to? Yeah, the bus is very, very nice. I enjoy my bus rides into work. How do you pick which newsletters to read? Again, it really just resonates with, what your strategy is. Like I like to read newsletters that coincide with some of the things that I look for, because it's just an extra set of eyes that of like something that I may miss. So having different newsletters that give me some cool ideas and good information. I then do my own research and development and my own preparation and use that information with my own and come up with an actionable trade idea. So it really depends on what information is good with what your strategy is. So, it takes time to figure out which ones are good, which ones are bad, but that's what I do. Do you think if Nvidia has bearish earnings that the market will fall pretty heavily overall? Yes. Notice certain stocks are starting a downtrend, and a lot of people are saying that only Nvidia is holding up the market. I wouldn't say that only Nvidia is holding up the market, but to answer your first question, yes. If there's blowout earnings and Nvidia really, really loses some areas of support, right? It's been like flirting with the 50-day. So like, if it can, really take out this 100-day moving average and it's going to negatively impact the overall market. Yes, because it's not just Nvidia, right? Nvidia has the highest weighting in terms of the S&P and the Nasdaq. It's also the fact that it's so influential. So Nvidia is very, very influential in terms of other AI names or other semiconductor names like AMD, Broadcom, right? All the other semiconductor names will get influenced by Nvidia, and with the concerns that we've been seeing over the last month, right? What's been the driving force of the market to the downside, right? Your Oracle, right? Oracle's totally taken a dump after Barclay, downgraded their credit. We've had, people question whether or not there is an AI bubble and whether or not OpenAI can pay back its dues in terms of the partnerships and the debt owed to other companies, stuff like that. So Oracle is taking out way too much debt in order to fund their different data centers and so on and so forth. So in plain English, the AI sector and the AI narrative, there's been a lot of fragility where a lot of people are questioning certain things. So Nvidia will either confirm those assumptions or confirm those recent headlines and topics, or will deny those talking points. So that, in terms of the timing, we need it most now, right? Will the king of the sector, right, the godfather of the sector, clear up some negative comments, or will it, reinforce those negative headlines, right? So yes, I think that it will, really, really have an influence in terms of overall market direction. Dumb question, but why would a firm not employ quant traders these days? I'm a professional statistician. and remember looking at trading jobs and seemed like they wanted quants. Um, some do, right? There's some firms out there that solely have quants trading for them. There's actually a company in my building that I work at. Um, I I saw someone with a backpack coming into the building literally last week, and I typed in the name of the firm because I never heard of it, and they're solely quants. They are solely algorithmic based, you know, quant traders. So they're certainly out there. In terms of my firm, we're all human beings. We take trades based on our own discretion, our own strategy. The only piece of artificial intelligence we use, um, and some guys use it more than others, is we use a order type. There's a company that has different order types that are algorithmic based, right? In terms of getting into trades, getting out of trades, it uses its artificial intelligence to figure out where the liquidity is to get you better fills in a way. So that's the only thing that I personally use. I don't use it all the time, but some of the other traders do. Um, but no, it depends on the firm. There are firms out there that only have quants or have the vast majority of quants at their desks. Whereas there's an edge in not quants too, because a lot of the quant strategies, once it gets to a point where it gets too busy and too crowded, that stops to work, right? Because you know, they're very very systematic and they do it based on the specific conditions that are in the market that trigger those buy and sell programs. So it's not all positive. It's some of it is negative because you lack the emotional discretion edge that a human being has that a robotic system does not. So it's not all positives, but again, they're out there for sure. Are you still using Shredderflow? I I'm not. I'm using. I do use like I'll use Twitter. Like I have a X Pro. It used to be like TweetDeck, um, where I have columns of different pages on Twitter that I actively look at throughout the day for news, and I use News Squawk, but I also have X Pro for different columns of people that report the news, different people that give really really solid information, and Cheddar Flow is on there, Unusual Whales is on there, so I do have flow on my Twitter feed that I look at. And if there's like massive flow and it coincides with something that I'm looking at, like if I'm bullish Nvidia and Cheddar Flow posts that it's $200 million worth of calls is being bought for the same week expiration, I'll definitely use that to my advantage. So I do look at flow when it coincides with what I'm looking at, but I do not specifically use Cheddar Flow in terms of their actual terminal, because since using that, my strategy has changed in a pretty big manner. I mean, this was going back. I used to use that, in 2020, 2021. So since then, my strategy has changed a decent amount. So that was when I used to trade breakouts and breakdowns using options. Now I mainly trade futures and equity shares and options as well, but not solely options. Do you use order flows for confirmation? I do not. I know, obviously, you guys know Carmine. Carmine does, and he's freaking talented as hell in doing so. And it works very, very well for him. And he's one of the best to do it in terms of the modern day, traders that I know. But I do not. I never did, and I got to this point without it. I like to really, really keep it simple, stupid. I am a big believer that um, the easier your system is, the easier your strategy is, the more likely um, you are to really, really get good at it and really, really excel at that strategy. I'm not saying that order flow is not easy. I'm saying it just doesn't resonate with me. The strategy that I have resonates with me. It resonates with my personality. I like a calm and collected approach where I could pre-plan my setups ahead of time. Whereas with order flow, it's real time. Like you got to really, really think on the fly. Not that I don't have to think on the fly with my strategy, but there's way more preparation beforehand where I'm looking at different setups that I'm looking to take around different key areas. Whereas Carmine and his use of order flow, he's looking at different potential scenarios minute by minute. So that just doesn't resonate with my style. So no, I'm not saying that um, it's make or break, right? It can be very very helpful for folks, but it's not make or break, right? There's plenty of traders that I know, including the ones at my firm, that are very very successful without it. But then again, right? There's no holy grail. Like some people are very very good at technicals. Some people are very very good at finding arb opportunity, right? Arbitrage opportunities, relative strength, relative weakness. So there's so many different strategies out there that can have the ability to really really um, you know make money, and you can monetize that for tons of success. So it's not order flow or nothing. So that's important to know. During the previous video, you share many reports from Goldman Sachs, famous people on Twitter. So who or which big company's report should I believe or read to do for gold and oil? Yeah, you should have self sufficiency. You shouldn't rely on any reports or any famous people on Twitter to give you ideas and to make you confident in the market. The vast majority of my ideas are self-sufficiently done. Like I don't need help from anyone else to come up with an idea that I can really monetize and put money behind. Um, so you don't rely on that. I read the newsletters and look at people's Twitter for um, a different point of view. I like seeing different people's point of views. I like seeing maybe someone's posting about something that I didn't see myself that could be very, very helpful with the strategy that I use. I'm very, very passionate at the market, so I always like learning about different things and reading about different topics. So, by no means do I rely on those people to give me information. No way. The reason I post them in my YouTube videos is to give a different perspective, to show you that it's just not me thinking this way. It's there's other people out there that have a very similar idea that goes to show you the credibility behind some of the ideas that I have. That's the main reason that I show some instances of different people on Twitter and newsletters. So Matt thinks that Nvidia earnings will be a sell the news event. Even if earnings are good, it'll be a red day for semis and AI names. Certainly the high beta names like NBIS and Iron. Could be. Time will tell. Could certainly be. I'm not ruling that out. Curious to hear about some of your biggest L's and trading mistakes. Yeah, I've definitely had. I freaking take losses all the time. I told you about the loss that I took on Friday. Took QQQ puts when it retested the major trend line that had been holding since late May. But again, I would have taken that trade 10 out of 10 times, regardless of the outcome. Some mistakes. I mean, the biggest mistake that I've ever done was oversizing in an illiquid market. Okay, this was when I first started working for the firm back in like 2021. The Russia and Ukraine war broke out, and different commodities were going parabolic. Right, you had the fossil fuels were going parabolic. The grains were going parabolic because Ukraine was a massive exporter of like wheat, corn, stuff like that. And you also had European natural gas have a massive move to the upside. Long story short is I got involved in a position, right? Good position, right? It was a good thesis in what I look for, right? It was a high quality play, right? I don't take plays that aren't A+ setups. My issue was is I failed to roll the instrument um, at a reasonable time. So the instrument that I had was still the spot contract, but the majority of the volume was already transitioned to the next month. So I had a position, and uh, basically what happened is I was stopping out of a position that I had on, and there was no volume. I mean, I always say that I probably lost like 8 years off my life in terms of the just pure panic that I had, um, and yeah, that was the biggest L. Not in terms of monetary, but in terms of the inability to get out of that position because there was no liquidity to do so. It was 3 a.m. when the market opened because it was a European instrument. And within the first hour of the market open, the amount of lots that were traded in the first hour were less than the amount of position that I had. So the first hour I was holding more lots than it traded in the first hour because again it was the next month that had all the volume. So that was a massive mistake and a massive learning lesson. And I've done it since then, but not to that extent. God, like tomorrow, coffee. You got to get if you have December coffee, in terms of an active position, long short doesn't matter. If you're holding December coffee right now, you have to get out and roll those contracts by tomorrow. You have to move from Dece to whatever the next contract is, March or something. Um, and if you don't, it's going to be very, very difficult to get out of that position, and it's just not good. So futures were a relatively newer thing for me at the time, not necessarily, but especially the more illiquid ones. So that was one of the biggest L's I've ever taken, and it was the dollar amount was massive relative to what I was risking because I couldn't get out. But it was also the fact that I just had no control. That was a scary moment. Ever blown account? Hell yeah! I've blown I've blown four accounts mainly between I started in like 2018, early 2018, like late 2017, early 2018. I was break even my first year, but then I got into options the second year. So I blew accounts at like the end of 2018, and then throughout 2019 I blew a couple, um, and then in 2020 I believe I blew an account as well early on. Um, I made a lot of money in terms of the COVID drop in 2020, but then when the market bottomed in March, I struggled for like 6 weeks because I thought the market was going to roll over again, but it never did. It just went up from there. So that was a struggle then too. But oh, for sure, I've made my fair share of mistakes, definitely. Um, where are you now, Dill? Are you still working towards scaling up, or are you at a point where you're trading such large size, scaling up isn't easy? No, I still have. I mean, relative to the other guys at my firm, I'm trading freaking peanuts. So there's definitely more room to scale. But yeah, I'm definitely working on it. I have a very very systematic way of scaling up. I use static risk per month per trade. I use the same amount of risk per trade, dollar amount, and then based on my performance for that month, the next month is I either use more or less relative to the previous month's performance. So, but it's slow and steady. Like if I'm risking, let's say I'm just making small amounts, right? Let's just say I'm risking $100 per trade now, and I do very, very well. Next month I'll risk 110. If I do really, really well again, the next month I'll risk 130. So obviously I'm using larger numbers, but it's a very, very slow and gradual increase. But it's a lot of it's based on my performance. If I'm really, really having a really solid month, that next month I'll size up much more for that full next month, and vice versa. So by no means am I at like the climax. Like there's a lot more room for growth, you know, relative to the other guys. Nice to see you, Josh. Other than the stock market, what other markets do you like to trade or have good experience with? Yeah, I mainly trade commodities, right? That's your fossil fuels, crude oil, gasoline, natural gas, um, metals, gold, silver, copper, platinum, palladium, grains, wheat, corn, soybeans, so on and so forth. Softs, coffee, cocoa, sugar, cotton. I trade those mainly. In terms of if you take all of my trades for a full year, the 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 max the vast majority of a percentage is in the commodity space. But this year I've traded way more equity shares than I have in previous years. So again, there's been some really solid opportunities this year in the equity space that I've been capitalizing on. And then options, I'll trade options if I'm looking for a ton of momentum in a near term amount of time, or if I'm taking a setup in an equity setup that I have that doesn't have a clear invalidation point where the stop loss isn't very clear. I'll take the options instead and just size for zero and treat it as a lotto. So I do trade options sometimes, but mainly mainly shares in equities. And then I trade currencies sometimes, right? I'll trade like pairs, like the yen versus the pound, the dollar versus the euro, stuff like that. Um, I'll trade crypto some very, very rarely, but I would say I use crypto more for like a piece of context other than something to trade. So I'm pretty active in different asset classes for sure. What is a sweet spot to roll over your trade to the next contract? Yeah, it's when what I do. It's very systematic now because to prevent any mistakes or any prevent any guessing. Right when the volume shifts. So if the spot contract is say like November, and it goes the next contract is December. When the volume is more in December, that's when I roll from November to December. So when the volume transitions to the next month, is when I roll. The only one that I do not do that with is the VIX futures. I use the spot contract up until the morning of expiration, and that's because the VIX pricing is very, very important to use the spot contract. But other than the VIX, every other instrument from S&P to crude oil to freaking soybeans, anytime the volume switches from the spot to the next, that's when I roll. Good for you, Matt. He said his last semester of grad school, I threw 10K into GameStop, $30 a share, sold at $387 a share. Holy crap. Threw it into Nvidia 4x that. Lost it all on a bad crude oil trade. Holy sugar. That is crazy. Jesus. God. Hopefully you found success since then. That is a crazy event, different events there. Wow, that's insane patience from $30 to 387 on GameStop. That's insanity. Awesome. Nice to see you here, Mike. Brando, legend. Elite Options 2. Subscribe to him. Learned a lot from Brando. He's awesome. We always ask about trading, but can you talk us about your experience and thoughts about investing? Yeah, I have a very simple method for long-term investing. I have everything on autopilot. I pick the specific instruments and ETFs that I get into. Every single day, right? Every single market day, Monday through Friday, other than holiday weeks, it pulls from my account, right? My account is the uninvested money is making whatever the federal funds rate is, 4%, whatever. It automatically takes from that and invests into the particular stocks and ETFs that I have, right? This spans from, S&P, right? I use Vanguard, so I use VOO, VUG, VTG, right? Value, growth. I use, Nvidia, Apple, Tesla, all the individual names, different asset sectors, right? FCX, which is like a copper play, MP, which is like a rare earth, right? So I have tons of different equities and ETFs that it automatically pulls from the account and invests into each one daily, in plain English. So I have like 10 stocks that the money injects into on a Monday, another 10 on Tuesday, another 10 on Wednesday, so on and so forth. It's absolutely autopilot. I don't look at it. I don't pay attention to it. I do not sell. I only buy. The only time I lift a finger is if the market declines 10, 20%. So if the S&P and the NASDAQ both drop 10%, I increase those daily amounts by 2x. If the market drops 20%, I then increase it a little bit more. If the market keeps going, drops 30%, I increase those numbers more on a weekly basis where, let's just say I'm investing $10 every Monday into Apple, right? On a 10% drawdown in the S&P and the NASDAQ, I'll increase that number to $20. If it goes 30% down, I'll increase that number to, say, $35, $40, so on and so forth. So I do not sell. I buy quality ETFs and quality companies, right? I'm not buying like altcoins and like penny stocks in there. I buy quality companies that I believe are going to, really, really, see solid premium growth and expansion in, 5 years from now, 10 years from now, 20 years from now, so on and so forth, right? Major Fortune 500 companies. And I just buy. Hands off unless there's a market downturn. Like in April, I enhanced all of those amounts by like 2.5x because the market was really, really crapping out. And I mean, again, I have the S&Ps, the NASDAQs, major, Nvidia, Google, Microsoft, like the Mag 7 names. AMD is a big one in there. FCX, MP. I have tons of different sectors, some REITs, some dividend plays, SCHD. So it's just set it and forget it. Take out the guessing. The moment you try to guess when the market's going to top and when the market's going to bottom on a freaking investment long-term scale, right? If you think that you can guess every single market downturn and upswing over a decade or 2 decades or 3 decades, you're out of your mind, in plain English. I can't do it. Warren Buffett can't do it. Brando, who's a phenomenal trader, can't do it. So I just do a set it and forget it and just let the market do its thing. Up, down, sideways, it doesn't matter. I'm investing every single day of the week. So that is my answer. Going off an earlier question of contract rollover, do you track contract volume with the open interest section? Not open interest. I mean, open interest I only look at if there's a massive, like an outlier, right? If I look at like the commitment of traders reports, or usually I'll get this in like the Goldman Sachs newsletters and I'll see it on Twitter. Someone's posting it on Twitter. If the open interest is massive leading into like an expiration, I'll definitely pay attention to that because that could enhance the ability for that particular asset to have some increasing amounts of volatility and as a result more opportunity. But I don't look at it daily. I only look at like massive outliers where there's a lot of lopsided positioning. Right, we had one a few months ago where hedge funds were record short the Russell, and it was a day in advance, or it was a day prior to a CPI report. I basically came on here and said, "Hey, if the CPI report comes out dovish, there's going to be a massive short squeeze in the Russell because hedge funds are record short, and they're going to have to cover." And that ended up happening in hindsight. I mean, not in hindsight because I did call it out, but so massive outliers like that. I'll look at the open interest and the positioning on the commitment traders and open interest on CME and ICE websites, but mainly I'm just looking at the volume. If the volume is more in the, not in the spot contract, if the volume is shifting from the spot to the next contract, I'll immediately roll that position if I have an active position in it. And I don't guess, I don't say, oh, I'll do it next month. No, I do it the moment I see the volume transition. So I do look at the volume, every day, but it's just a quick, I could look at it in 5 seconds and tell you whether or not the volume is higher in 1 month as opposed to the other month. Hi, Dill. Can you share with us how you got into the prop firm space? Traditional prop firms have been of interest to me recently, but I am unaware of what to look out for. Yeah, I did a recent podcast with Words of Wisdom where the main thing was the main talking point was how I got into the prop firm, but it really comes down to networking and the ability to pitch yourself as an asset in plain English. We went over this about like 30 minutes ago too, but as living in this world, we have access to so many things and so many people. So again, type in prop firms or trading firms in New York City, get a list of 10, go to, look up each one of those, figure out who works for them on LinkedIn, Instagram, Twitter, YouTube, you name it, and reach out to those people. Say, hey, whether you have a proven track record in terms of profitability, whether you have, a solid understanding of how to code and how to, turn strategies into quants, into quantitative strategies and systems, right? You never know, right? Or even bluntly say, hey, I'm very passionate at the markets. I'm very, I'm young, I'm driven, I'm whatever the case may be. Is there anything I can do to make, to bring value to the table? Like asking other traders that are working at prop firms, right? Show them that you are an asset. What makes you stand out over other applicants? How can you make their lives easier? How can you, give them edge that they can enhance whatever they do, right? There's so many different answers that you can do, but it really comes down to the persistence and the networking and the ability to show that you have worth in terms of you working for them. So that's my answer. I'm heading to NYC on Thursday to Friday. Any restaurant I have to try. I need a genre. Like I have like favorite burger, favorite pizza. You want pasta. You want Mediterranean. There's too many. If you want, message me on Instagram and give me the genre and give me the times and the amount of people that you're looking to come with, and just so I know that I'm giving you spots that have availability. I don't want to give you spots that don't have reservations. So hit me up on Instagram. All right, I'm gonna end it there. I appreciate everyone that came on here and supported, and that's it. If you guys have any questions, if you're in the Discord, hit me up in there. If not, hit me up on Twitter or Instagram, or reach out to Carmine. He'll send you my way, and that's it. Again, I appreciate all of the support, and I wish you guys have a great night or morning,
relative to whatever time zone you're in. Peace.